So there are all sorts of concerns now about the consumer. Now we layer on top of the inflationary concerns, the rate shock, the interest rates going higher. What are you seeing at the moment?
At the moment, we certainly see consumers shifting their spending. I would say they spend less on clothing, on traveling, on big ticket items. But so far, I would say in food, it's been mitigated. It has not been a big effect. If I look at our business, our volumes are still up versus last year. They've slowed down a little bit, but we don't see any signs of massive change. Now, we're in biscuits and chocolate, not necessarily categories that get immensely affected by a recession. But I would say we see changing spending, but so far food seems to be relatively unscathed, I would say.
And people haven't been trading down to private label brands, which we sometimes see during recessions?
Yeah, I think in other categories that we are in, yes, I think that is happening. In ours, it's happening a little bit, but particularly, for instance, chocolate, there's almost no private label. In biscuits, yeah, there's something happening, but it's limited. It's not a real sort of worry at the moment.
And what is happening with food prices, Dirk? Are we finally starting to see some relief there for consumers at the grocery?
I'm afraid I have not good news there, in the sense, what I can tell you, that our input costs for next year are going to be up as much as they are up this year. So which means that we need to keep on pricing. Now, there will be an effect of what was priced in 2022 into 23, so you won't see the same size of price increases, but there will be more price increases coming in food, in my opinion.
Even though we're starting to see commodities prices come down, so ingredients, oil prices come down, shipping rates come down, shouldn't all of that be helping?
Well, it depends from company to company. In our case, what is happening is, yes, all those things are coming down. They are still much higher as they were last year, so still an increase there. We hedge, so we're well protected for 2022, but we have to deal with that extra effect for 23. And then we have other input costs, particularly, for instance, in Europe, which is big for us, energy, that is really going through the roof. Packaging costs are not coming down that much yet. So it's sort of a shift of what's going up in cost, but it's still there.
The other thing that has shot up that I'm sure you are not too happy about is this dollar, and it's getting a big boost today. Perhaps one reason behind the equity selling. You're a company that does what, still 80% of sales overseas. How are you managing this?
Well, that's declining because the other currencies are all getting smaller against the dollar, but that's not really what we want to see. Well, we have to compete locally. We cannot have our people in India or in China think in US dollars and price our products in US dollars. We compete locally, and we're competing well. Our business on a country-by-country basis is probably doing better than it has ever done. And at constant currency, we will have the best year by far, with very strong growth versus last year. If you translate, though, those currency in dollars, that's where the weakness comes, and our bottom line roughly stays flat for the year. That's only 1 year, I would say. We don't try to manage the business in line with that, because I think that would be wrong. We manage the business to win in the local markets. And I'm sure that the dollar will lose a little bit of its strength, and then our translation into dollars will look a lot better for us.